It starts to fall into the category of you're kind of dumb if you don't do this.
Right.
And it's like, why wouldn't you?
Welcome to the Coles Ventures Podcast.
Ready to just jump in?
Sure. Fire away.
We can just start. All right. Well, thanks for taking some time and coming on the podcast. I'm excited to kind of get to know you a little bit better. I know we spent 4 hours together. Golf. That was on golf. So that was like, working. But,
Yes.
I'm excited. If you just want to start kind of general background, what you're working on. And all that would be fantastic.
Yeah. So Devin Miller, I am currently the CEO and one of the co-founders of SecureSave. And SecureSave does workplace emergency savings programs. And so best way to think about it is kind of like a 401k or a health savings account. So you get it through work. Your employer launches a program, offers incentives. And the whole idea is just to help people be prepared for the unexpected financially.
Yeah. That's interesting. So you mentioned incentives. What kind of incentives? Are they
it's
offering?
pretty cool. So the whole background of emergency savings is a workplace benefit. That like the idea is that for the employer, people are financially stressed. That stress shows up at work. It impacts their work in a variety of different ways.
Yeah.
And everybody knows what emergency savings is, but everyone's bad at it. It's kind of like budgeting, right? People are really not good at budgeting, but they all know what it is. They want to do more. And so in the last number of years, employers have been launching these programs to boost the financial well-being of their employees. And think about like low to moderate income workers, people in a factory, healthcare workers is our biggest industry. Age ranges can vary quite a bit, but it's really just people working regular jobs in regular companies, big companies, small companies. But what the employer is trying to do is increase their financial well-being. And when you increase the financial well-being of those employees, a bunch of things happen. They're better prepared for retirement. They actually show up to work more, which is kind of a crazy thing.
Crazy idea.
And what happens is that if people are stressed over their finances and they don't have the money to cover it, like they got to get creative. They got to work another job. They got to drive Uber. They got to like go get a payday loan somewhere. And a lot of this stuff distracts from their work. So they work more and they also will stick around in that job longer. So it's a clear ROI for the employer and employees love it. And to your question on incentives, the idea of workplace emergency savings, you have to give them something better than they can get on their own. It has to be faster, easier, more automated with a clear incentive. And so we help employers launch these programs so it's faster, easier, and more automated. And then their job is to put a little extra money on the table. And it could be $100 a year. And that's just golden. Because what happens is the employees may be saving $1,000 a year on average. But if you're getting $100, that's a 10% return. Like you can't get that anywhere else. And it starts to fall into the category of you're kind of dumb if you don't do this.
Right.
And it's like, why wouldn't you?
Yeah. So somewhat kind of on the same lines of thought as like 401k match a little bit.
Yeah. But this one's even one of the knocks that people, I think it's a bit short-sighted, but this is a big knock that people put on a 401k is, well, that money is inaccessible, or if I need to get it, I'm going to get penalized, or I'm going to have to jump through a bunch of hoops and fill out paperwork. And you can get loans or hardship withdrawals, or you can just pay the taxes and pull it out. But it's high friction and it's high penalty. Where with an emergency savings account, it's the exact opposite. There's no restrictions, there's no limitations, there's no paperwork, and there's no penalty. And so that's a big part of why it helps with retirement, is because it creates this kind of safe place, secure place that you can go save. And then it makes you actually feel better about retirement at the same time. It's like, oh, okay, well, I feel better about putting that money locked up because I know I'm going to get this additional cash available to me if I need it. Yeah.
So what success stories have you guys seen thus far with people saving more? I mean, we can kind of talk about, I'm sure you've seen not just, I used it to fix my service tire, but used it for X, Y, Z. Like, what are some of the weird, talk about some of that.
So a little background. I've been an entrepreneur for like most of my life and mostly in financial technology. And the thing about financial technology, you have to remember that most people are very bad at personal finance.
I feel like it's so interesting because most people, exactly what you said earlier, right? Most people know they're supposed to have an emergency savings of like 3 to 6 months. Everyone knows they're supposed to have a budget and follow that pretty, not super strict, but like, at least hit this general target. But so many people, like it's such an amazing thing that I don't know what the stat, and you might know that it's like, most Americans have like less than like $5,000 in their savings account, which is baffling. It's crazy. It's like one broken leg away from being like you're toasted.
And the people that really have high incomes and are high savers and high net worth really drastically change the average. If you look at, if you look at it differently, you'll find that the saving stats and the amount of money is just very sad. And there's a lot of work to be done. But, in my career, I come at this more from an engineering challenge and a psychological challenge than I'm not a finance person. I don't work at banks. I didn't do investment banking. I didn't come through the traditional finance route. I did engineering and just kind of found my way into the space. And I find it fascinating because if you approach things from a technology standpoint and from an emotional problem to psychological problem to solve for people, you view it very differently. So with emergency savings is very similar. You just have to have better tooling to solve for this problem. Like a lot of the problem with why people don't save as much as they do is we make it really hard for them to do.
Right.
And the more regulation that the government puts out around opening bank accounts and managing that just adds more friction, and it leaves more people behind. But really the bigger problem is psychological. People view money very emotionally, and money is just ones and zeros. Like it doesn't care. It's just ones and zeros. It doesn't make a difference. And it's a very complicated set of ones and zeros when you dig into various components of it. So we really try and design for emotion. And so with all that said, some of the things that have been surprising, I think less surprising to us coming from that perspective than people that around us. When we were working on this project originally, I remember talking to a lot of VCs and finance types, and they were like, people won't do this. Poor people are poor because they make these bad decisions. And it's like, well, let them surprise you, right? And it's hard when you're pitching don't take this the wrong way, but when you're pitching a VC on the 100%. Idea, right? they have a hard time relating to this concept. Yeah. And we always really got excited when we met people that came from low to maybe mid-income backgrounds and really worked their way through life. They understood this, but we were surprised by a number of different things. So for example, when we launch with SecureSave with an employer, if they have a decent incentive, 60% of their employees on average will sign up, which is completely unheard of for elective benefits.
Right.
So meaning something you're not kind of forced into, like auto enroll 401k or health insurance is kind of falls into that a little bit.
Yeah.
But we have employers like very, very large healthcare employer of ours. We are their number one benefit that they offer. 75% of their employees use it. And it still blows the minds of people that are kind of in the broader benefit space. They're like, they challenge us on that. Like, what do you mean by adoption? Like opened bank accounts that are being funded. Like, well, okay, that's very high. The other thing is very sticky. People like it. We have a 95% annual retention rate with employees. If they stay with the employer. And people save, they don't take too much money out. And we still get challenges on this. Like, okay, even if you get high adoption, even if they stick with it, if you put $100 on the table, they're just going to take it and they're going to run. And this money is not actually going to compound. And that's not true either. Very few people actually raid the account. And so on average, we see deposit balances build very consistently month after month, year after year. And so I think the most surprising thing is that when you give people the right tooling and the right kind of emotional framing and the right incentive, and it's not even about size of incentive, it's how it's constructed, then you can actually change these behaviors that have been really hard to turn around.
Yeah, no, that's fantastic. And I'm sure, all these people are just saying, oh, I don't think so. And it's like, no, actually people, once they get people kind of in the groove of, and they see kind of, and people love to see the numbers go up. And so when they're like, oh, it's actually like, kind of like what we talked about earlier, it's like, they know they're supposed to.
Yep.
It's been really difficult in the past. Just give them an easier route. And there you go.
And I think, I always use the analogy just because I've been in fintech this long, mint.com, when they came out maybe 15 to 20 years ago, they really highlighted with technology that people do want budgeting, but Quicken was a pretty complicated product. Excel spreadsheets, which is what most people actually still use, I think, generally
for budgeting.
It's it's, you're starting from a literal blank page. It's really daunting. And so Mint basically demonstrated that, and at the time it was crazy, that people will hand over their online banking credentials for an instant budget. And everybody that was kind of in the broader space at the time was like, that just won't work. They won't do it. And people gladly did. And they still do. And now it's like commonplace. But it really showed with the right tool and with the right incentives and the right kind of emotional framing, you really can change behavior around these things.
Definitely. I think, and again, when most people think about fintech, they're thinking about, maybe most people's minds go to Bitcoin or, that crypto or investing or whatever. What made you guys start on more of the, I guess, maybe less sexy, just, stable savings, stay the course kind of route?
Well, like I said, I've been in financial technology for over 20 years now. My other two partners have been in even longer. Like they're entrenched in it. They like it. And all three of us are very, non-traditional backgrounds for finance.
Okay.
And I think that that's very helpful because, again, we have a very fresh kind of different perspective on it.
Yeah.
But I think I just personally, I like the space because it is just littered with opportunity in problem spaces. And they're all quite different and nuanced amongst them. Like, you mentioned some of the things like, whether it's crypto or, even personal finance. I mean, even you get into like, enterprise fintech solutions and things like that. Like they're all wildly different when you start digging into them, and they take real expertise to build. It's not like building a social app or even like your typical B2B SaaS product. It takes at least some knowledge of that B2B segment, but the SaaS tools themselves are not wildly complicated.
Yeah.
But within fintech, you really have to handle some pretty complex problem spaces. The technology alone could be really daunting and changes fairly frequently. But there's compliance, there's the risk management side of it, and you're literally moving money around in most cases. And that can't be done haphazardly.
Right.
So there's really a high bar that you have to carry as well, as far as how you build and how you operate those businesses. And, so it's fun. It's interesting. It's, and I think once you get into that area, most people that I know that are in financial technology, they don't really get out of it because they enjoy, I think, that same kind of concept.
Yeah. I mean, let's talk about that a little bit. You said you were an engineer originally by trade and then kind of got into the fintech space. How did that come about?
Yeah. So I did automotive engineering. I went to Western.
Okay.
Shout out to the Vehicle Research Institute at Western Washington University. Cool. And my degree is industrial technology for vehicle design. So very specific, very kind of like deep specific technology focus. And I basically built race cars through college.
Were you on I went to Western as well.
Oh, you did? Yeah, I didn't know that, Blake. Yeah.
So my roommate was in he designed, I think he was like a club, or he was also a mechanical engineer, but he designed like race cars.
Yeah. So I was in the Vehicle Research Institute is the name of the program. And the program that I did was the Formula SAE, Society of Automotive Engineers. Yeah. And so we built open-wheeled, open cockpit race cars from scratch.
That's what he did.
Yeah, probably.
He would just come home and be, I was like, well, how's your day? He's like, oh, just designed a chassis for this race car. I was like, what is happening?
No, it was crazy. We were part of a really small team and we built this crazy car. I had my focus was on, because it's a design competition at its core. And so you have to design the car, and it's also like a business plan competition in part, which is pretty cool. So I carried all that. So we had the cost accounting, you have to build like a go-to-market plan. You even had to design the factory and all these things around it. Then you have to like present. And so I remember we went to the competition and you're presenting to, in my case, it was like a couple Ford executives from their marketing team. And then you have to build the whole car. And so I did a lot of the suspension work and things like that. But like the actual real brains and engineering talent was several other people, but they built a car that was just astounding. We had a 0.5 liter V8 that was custom built.
Oh my gosh.
We had a composite chassis. And just a bunch of really cool stuff. But it was like a 3-year project that I was on. Yeah. And it really, again, I want to focus on the fact that it was also like a business plan competition. And
that is unique, because I did a couple of business plan competitions. I did the finance and the business side of it. And it was, strictly the business side of it.
Yeah,
obviously, it was like marketing plan, all that.
Yeah, it was more of like a thought exercise.
Yeah, that's
where
very
this
cool.
one was a thought exercise combined with building and racing an actual car. But so I learned through that part. I was not really a super great engineer.
It's a good place to learn.
It's a good place to learn. And personality wise, I didn't like sitting in the lab coding for a whole weekend. Yeah. But I loved the business component of it. I loved the fundraising and like recruiting the team and all of those things. And so when I graduated, I went into, I remember my professor, Dr. Seal, who's long gone, unfortunately, but he was like the main driver of that program. In passing one day, said to me, he's like, Devin, sales engineers are they're really great people, and they have important work that they do. And I remember thinking that was a very subtle but distinct nudge.
Maybe it's not for you.
And he was right. And so I went into sales and technology sales, and my wife actually started a company in financial services about 20 years ago, and I joined her with that. And it's
awesome.
Kind of off. And so I combined kind of that technology development side with kind of the sales side with it. Then she was the one who introduced me to financial services.
Wow. That's crazy. And then after that, I mean, I know you worked for a couple different startups.
Yep.
And started or your own, or kind of led a couple through the whole process.
I've been doing business. I've been starting companies since I was in high school. Yeah. And then My wife and I started that company. She led it when we were in our early 20s. And then I took that experience and launched a company called Balance Financial, which was, speaking of Mint, it was basically a white labeled version of like mint.com that we sold to banks and CPAs and bookkeepers and financial advisors. And we ended up selling that company in 2013 to a big tax software company called TaxAct. And then before that, I had worked at a startup, big venture-backed startup that was doing fraud prevention for big banks and credit unions, or big banks and card issuers more specifically. And that got acquired by Visa.
Wow.
And so that was kind of the start of my startup experience there. And then after my last company got acquired, I kind of took 6 years and just worked in public scale growth stage companies. And then in 2019, one of my co-founders convinced me like, we should go do another startup. And in 2019, that's
a disease.
It felt like a super great time to start a company.
You're like, this is no way, nothing's going to change.
Yeah. And my wife is quite adventurous, fortunately. So she's like, all right, we'll give that a shot. And then the pandemic hit. But it's worked out and we've had a good run.
That's awesome. That's fantastic. What's the drive? I mean, you said you've been starting companies since high school. What's been that kind of entrepreneurial spirit versus just, I'm going to go work for some, mainstream Fortune 500 company and just ride that out?
Yeah, I think it's evolved over time. So I grew up watching my dad owned a small business.
Okay.
He was a dental technician. He made fake teeth. So today this is like all computerized, basically, CNC. But it was something he did for almost 50 years. And so I would go to work with him and like before and after elementary school, I would go visit him, just for fun, like when I was, after I graduated or when I was back from college. So I just always saw it. And, I remember in high school, it's hard to get a job when you're 14 years old, 15.
Oh, yeah.
So I just started detailing cars for neighbors.
Probably made more money that way too.
I totally
honestly.
made more money. And so then through college, I did lifeguarding and some other things, but I always came back to auto detailing. And then my wife now, my girlfriend at the time, we launched Dr. Auto's Detailing, Devin and Rebecca's Auto Detailing.
Nice.
And we did that kind of on and off through college. We, hired some friends and we paid taxes. Like we did the whole thing.
That's cool.
And it was enough of experience for me to realize I didn't want to do manual labor. And, there's funny is all this talk today of like people should get into the trades, like blue collar jobs. And
it's like, have you ever done that?
I know. I don't think most of these people actually have any idea what that's like. Yeah. So when I graduated, I was like, I'm going to go try and work for somebody and see what that's like. And I'm going to like get real sales experience and training, which I thought was great. And then I kind of went back. And I think part of it was, as I got into corporate America, I just didn't really see myself as someone that was going to be happy kind of on that long path. I think for some people it's perfect. For me, I got into that. I had a couple of years experience. It was a great company, good learnings, but I don't see this clicking for me and keeping me satisfied. And very early on I had that. And I think this is important if you want to be an entrepreneur. There's a risk reward component and it's not even financial. It's, will you be mentally content in a big company and in your specific big company or field. And I was doing sales and I didn't feel like I was going to be happy and that I knew I would make good money and I already was, but I knew that I would not be happy and I think it wouldn't be good for me. So I was willing to give up money and consistency for the opportunity to do something that was more fun basically and fulfilling. But it was going to be, ups and downs and it would be a risk. But, in long talks with my wife, it's better to be content and feel like your place in the world and that you're adding value than just collecting a paycheck for me. So that was kind of one change. But then over time, I really just found that I like being creative, building things and helping people. That's kind of like a anchor mantra for me. And I think that's in the recent years been something really important that I think the best form of like even artistic expression. I was talking to an entrepreneur friend of mine the other day. We were having lunch and he agreed with this kind of view that if you really like art and you like creating things, building a business today in this world with technology, especially, there's no greater expression of creativity that you can find. And so for me, like if I want to be creative, using technology is key to that. Building things like building a company is wildly complex and fulfilling. And it challenges every part of your personality and your brain. And if you want to help people, nothing can scale like a company. as fast or as dynamically or the impact that it can have. And so for me now, I think that's kind of where I anchor. Like this is just the most fulfilling thing I could do and spend my time on.
Yeah. Multifaceted for sure. There's a lot of things that you can, spend your time in a million different ways, but
Correct.
picking that is like the main problem. But I mean, looking back at all the companies you've worked at or you've started and kind of grown, how do those compare with SecureSave and how you guys are doing that now? Are there any things you learned from those ones that you're doing differently this time, and what's that all look like?
Yeah. Yes. And next company I do probably will look even different based on these experiences. Mm-hmm. And I think it's all point in time too. You have to kind of take stock of just the world. But I think specific to me, a few things. I really value co-founders. I've had co-founders in the past. I've not had co-founders in the past for different projects. And I think it's super important to do, I think for a bunch of reasons. One is you can kind of share that emotional load, mm-hmm. and otherwise it's very lonely.
Right.
It's an incredibly lonely job. Even just being CEO everything flows through you. Everything's your fault.
Yep.
Everything requires your stamp on it, either directly or indirectly. And it's a difficult job to explain to other people. And a lot of the times you shouldn't.
Yeah,
like coworkers, you shouldn't tell them all the time, all the crazy stuff that's going on or all the emotional ups and downs. But if you have a co-founder, that's kind of your safe place that you can have that. But it's also key because these businesses are so complex and they move so fast. You really do need people that you can very much equally share the load with work-wise. And so, my current partners very complementary in different skill sets. And I definitely feel like I could just offload huge chunks of the building process to them.
Well, it's nice to have too. I mean, just the trust of like, hey, I've got this, this just came through. Can you just handle this? And you'd be like, yep, no problem.
The other thing I've done venture-backed businesses and I've done non-venture-backed, and they're all hard. Mm-hmm. I always joke to my kids, you could launch a taco stand in downtown Spokane and you're working 100 hours a week. You're financially strapped, you're stressed out of your mind. Yeah. It's super hard. You can attempt to build, the greatest like AI hardware product out there and try and need to raise 100 million to even start it. Thing. Super hard. Yeah. Like not everybody can do either, right? Like there's definitely some people that should not attempt either of those.
For sure.
But for me, it's, if you want to, again, be creative, build things and help people, you got to do it with other people. Like you're not going to necessarily be able to just do that as a one-person show. Yeah. And so as soon as you start bringing in co-founders and partners and you're trying to build something sizable and impactful, in today's world, you're probably going to do it with venture capital. Mm-hmm. And I don't think I've changed my perspective on that yet, but the VC market and that capital market segment changes all the time and is always going through. So I reserve the right to change my view on that later. But for now, I think that's the case. The other thing is just how we construct companies has gotten much more learned, I would say, just from experience of, like for today, we're fully remote. We try and keep the team very thin. We hire very experienced people. We pay them as much as we can. Yeah. And how we build the culture and the operating process is very thoughtful. I've even had VCs tell me, like, you run this company like it's, $100 million business, like you're overdoing it. I'm like, I don't think so. Like it doesn't take a lot of time and effort to put some of these things in place. It's somewhat of a one-time thing and you just have to be consistent with it. And I just find that everything else, you can focus more on the things that matter easier if you have good process in place. Yeah. So the customers, the product, the business model, revenue, like these things that really require day-to-day attention and iteration, but you're actually operating cadence and model and how you think about the culture and stuff. Like that should be kind of a one-time thing that evolves periodically.
Right. So, and in a sense, like for most VCs, if they're giving you that advice, like, well, it's what you want. Like I should have that mindset from day one of like, I'm going to start out operating this like it's going to be $1 billion company. Like,
and I've told that to other entrepreneurs and I just, sometimes I see the headlights kind of like the light goes on inside when I said, look, you need to start your company with the idea that, especially if you take VC money, specifically in that case, that this is going to be a public company. Yeah. That doesn't mean you operate it like a public company in the beginning, but you need to have that as like, this is where it's going to go. And I don't want to make decisions or put things in place that will prevent that from happening.
Right. Scalability issues are huge. And we see that all the time of companies just like, oh, well, like, you know, it was good when it was this big and now it's this big and I got to redo everything. Yeah. It's like, you know, if you set that expectation up early, then you'll be fine. We talked with it was a specialty like salami and like meats company. And she was a previous Amazon person. And so she set it up like before she was doing anything. Maybe this was like a little bit extreme, but she, you know, manufactured and built or bought her own manufacturing plant with the idea that like they were going to go national before she'd even expanded past Seattle. I mean, just with the mindset of like, this is going to be huge someday. And like, I'm going to set it up now so that in a year, 5 years, 10 years, I won't have those growing pains. It'll just be, okay, great. We'll open up a new one and just keep going.
Yeah. Well, you have to be careful of that though. And it goes back to like,
and then you get the other problem.
Yeah. You got to keep the team as small as you can. Don't overhire, don't overspend. But, you know, definitely, think about how this will grow into that scale. But I think where founders get in trouble, and I've fallen into this as well, is that they get ahead of themselves with scaling too fast in certain ways. It's super painful to pull that back. But I think just from how do I think about operating this company, communicating to the people, you know, are we remote? Are we not? You know, decisions like that are really important to be thoughtful around. And I think that was one of the problems with, you know, the whole remote versus not remote. I think in the past and being part of these cultures in the past and even building some of them where, you know, it's very in person, you didn't have to be that intentional about your culture or operating because it just was. It just was. And usually the strongest personality like set the tone. Like we're going to be here at 8 and we're going to leave at 6 or whatever, or we're going to be in meetings all day long. And everyone else just kind of follows it. But when you're remote, you can't you don't have that same, I think just cultural pull.
Right. You have to be more direct.
You have to be more definitive and intentional. So.
Yeah. I mean, what's been the biggest learning experience how big is your team currently?
We have like, even with some contractors, probably like low 30s. All in. Yeah.
What was I'm sure there were some growing pains going from you and the co-founders to then first hire, second hire, you know, team. And then also off of that, what was the thinking behind remote first, given all of everyone's going back to the office, everyone's, you know, going to be here Monday through Friday, all the stuff that's going on.
Well, one is, you know, in fairness, when we launched in 2020, there was no other option.
That's true. Yeah.
But we had already started down this path, my main co-founder, Bassam, and I, we were going to do a remote first company anyway. That was kind of our thinking and what we wanted to do. And so the pandemic just kind of pushed us into a box that we were already building out.
You're like, well, I guess that worked out.
It worked out. Yeah. But since then, and I continue to tell my team, and it's on our website, like this is how we operate when we recruit people. We are remote first and we will always be this way. You know, I think for me, there's some things that people don't talk about related to remote. So let me focus on those. Like one of the problems with in-person that I've just experienced sometimes in my own past is the people can get way more political, and like that political animal in all of us is much easier to kind of pull out when your culture is in person. I also think that the idea of like work theater is way more prominent in person.
100%.
Because like, and I remember like one of my first jobs, like I was in sales and it was a very easy job in the sense that it did not take a lot of time to do the job. And I did very well at it. But they're like, you can't leave until the area vice president leaves. I'm like, but I literally don't have anything to do. I have nothing to do. And I would go to I'm like, give me more accounts, give me more territory.
Do something.
Coach me. And he's like, I got nothing for you. But like, you can't leave till he leaves. I'm like, that's just crazy. And I've been in other groups where people just like, hey, let's have coffee and talk about this. And what they want to talk about is they want to complain about something, or they don't want to do the actual hard work that's been assigned to them. They want to go brainstorm and work on other fun things. And when you're remote, I think a lot of that goes away just by the mere fact that you're not there all the time with those people. It's much more, this is what your job is, this is what you need to deliver, and this is when I need you to deliver it and how I measure that. And you kind of don't have anything left to do.
If you do that, we're cool.
And so if you're not doing that, it gets wildly exposed very quickly.
Exactly.
And again, you can't just walk down the hall and bother a colleague. You can't. So I think there's an element of that again, I never hear anyone talk about, like the pros and cons between remote but I think the people that love in person are those that have gotten to where they're at by being very good at playing the politics and by managing the work theater. They're probably excellent at what they do, but there's still an element of like, that's also what they're good at in these big companies, and they don't know how to operate any other way.
Yeah, that whole, I didn't realize when that became such a big movement of like, Starbucks was pulling all their people back. Amazon was pulling all their people back. I was like, this is kind of like, it's interesting how it evolved so far in one direction. I mean, kind of through no fault of anybody else's, but then for a while it was kind of stagnant. It was like, what are we going to do? Or is it okay? Is it not? And then it was just such like a tsunami of like, all right, that's it. And then everybody's back. And I was like, this is crazy. That's insane. But I mean, in a normal company, in a startup, morale is huge. Like it's hard to keep everybody. There's a lot of unknowns. It's tough at the beginning and even just like medium and at any stage. And then I would imagine with a remote company, you have to be even more diligent about that. How do you look at that as the leader of the company, kind of keeping people in the loop on what's going on, but then also like making sure people's morale is up and they're still cooking with what they're going?
I remember one time, just as a frame of reference, how I think about this, I had a friend who worked on a political campaign, and one night in college, he asked me to come down and help the candidate, like stuff boxes with books or something like that, whatever. And it doesn't even matter what side of the aisle. This isn't like a non-political political thing. But I remember that candidate, I was just, what's it like running for office? And it was a pretty high office. It wasn't president or anything like that, but it was a pretty high office. And he's like, it's being okay with delivering the same speech over and over and over again, and understanding that communication and consistency is key. And it's just, you can't forget and you can't get off the line. And I think there's an element of truth to that for sure, which is consistency of message. And so, but it's also consistency of how and where and it's delivered in a company. And so for me, there's a big element of creating a culture that has a heavy emphasis on transparency and communication and has a very clear cadence and rhythm and form of how you communicate. It could be speeches, it could be written. I think it depends on I don't think it really matters the form per se.
Pick one.
Pick something. Pick what you're good at. Like, if you like writing and you don't like talking and you want to do public speaking, but like, fine, just send emails to your team regularly, right? Or if you're not the extemporaneous type, and you don't like that, and you don't like saying a lot of stuff, that's okay too, but find the thing that you can be successful at in communicating. Because if you can't be a good, consistent communicator trying to build and run a company, you will not be successful.
Definitely. I mean, especially in a startup, that's huge of any employee of like, I feel like that's where a lot of companies kind of falter a bit is like they misread it as like, it's not that employees are, thinking that the ship is sinking, but they're just with uncertainty and no word is being said. You kind of assume it's like, okay, well, what's, what, but if you're getting those, weekly emails, hey, here's what's going on. Here's where we're headed. What's going on, that sense of security and at least like, oh, okay. Like we're on the right track. Like we're still going. This still matters. Right. Like,
So for us, what that looks like is we have like on our website, very clear mission, vision, operating principles, like about our culture. So we write it down. Doesn't take a lot. It hasn't really changed. We have a very defined written strategy. It does change every once in a while. We review it. And then we have a very clear cadence of like when we meet and what we meet about. And, there's kind of heavy amounts of communication, like medium and high, and they kind of oscillate through the year, and you kind of pick your cadence, and it's changed and evolved over time. And this goes by a comment of, building and operating a company like it's a bigger company is really not that hard. I think it's just a little bit of intentionality, and then letting it run for a while and not messing with it, and then coming back, revisiting it. And I think people really, really like that consistency. They enjoy that, I know how Devin is going to operate and how he's going to be. And when you fall out of that pattern, they get suspicious, as they should. Unless you are intentional about, hey, we're going to make a change and here's what it is. And so they learn to trust you. And if you're transparent enough about what's going on and why things are happening. And one thing I found just in companies, and especially when I've not been the leader, you just want to know how decisions are made. Like, why did we make that decision?
Right. They don't care what it is. They're just like, explain to me what's going on. And they're like, oh, okay.
And I think that's part, like back to the return to office. I think a lot of times, like they're very opaque on those decisions.
It's like, why? It's like, because everyone's doing it. We're all going to, it's like,
or it's
okay,
like, we've looked at the data. Well, what data?
Yeah, what exactly?
Yeah, what data?
Who are you asking?
Don't ask that question. Doesn't matter. So as long as you're at least transparent of your decisions and explain, and I tell you, this is how we make decisions in this company.
Yeah.
So like, I think that's really important. And if you do that, I think people will follow you very intensely, and trust you very intensely.
Yeah.
And people will want to be a part of that. But if you're all over the place and you're inconsistent and, 1 month you're sharing everything and then like 2 months you disappear on them, like you're going to have huge turnover in your company.
Yeah, no, for sure. And when people show up and they know, somewhat to an extent of what to expect and what's, expected of them.
Yep.
It's huge.
Yes.
Just showing up to work and being like, okay, like this is what I'm kind of supposed to be doing. Like, I don't know. But that's awesome. So you said you've kept it, you said right around 30 people is on your team?
Yeah, I don't like managing a lot of people.
Even 30 seems like a decent amount.
It starts to cross that chasm where things start to break a little bit. But the last company I was at, we had like 160 or 70 people globally across
that's
many
tough.
time zones. And it becomes just like a communication job and like you're just managing that rhythm and communication and things like that.
Yeah.
And, so I think I like hearing about companies these days that try and keep headcount as flat as they can. It would be just whatever technologies you want to kind of reference. It's so much easier to run these, and there's so many contractors you can hire and specialty systems that you can bring to play. I don't think companies need to be that big anymore.
No.
And you can build huge businesses still with pretty small headcounts.
Oh, for sure. There's that one interview with Sam Altman a while ago, and he was predicting that like the solo founder company was going to hit $1 billion, in the next 5 years or something. Yeah. It's like with everything AI, there's no need for you to have, 50, 100 people on your team anymore. It's just not, unless you're doing something with like manufacturing or something with like, you need a lot of people. It's like a software company is like, there's just no need.
Yeah, for sure.
Yeah. But when you are looking for new hires, what are you looking for? What traits are you looking for? I know you said you're kind of looking for more senior, more experienced people.
Yeah. And this is a flaw in remote for sure, which is, I think it's very hard for new hires, for recent grads, I'll say, and for early career people. And I don't know if there's a great solution for that besides going back to the office and finding a company that is that culture. Now, as I said, I think there's cons with those. You're going to get sucked into the political world and the work theater. And so that's...
Would you agree though that a little bit you kind of have to?
You do.
A little bit, you got to, for a couple of years, you got to play the game.
You got to play the game. And I think that, like I said, that's the inherent trade-off.
Yeah.
But I worry about new hires, recent grads, coming into the workforce today and how they're going to learn.
It's tough.
Various things.
Yeah.
It is tough. And as a young company with big aspirations and very set targets and a fast pace, we can't help those people.
No, definitely not. And it's, no fault of your own, but I think that's been a more underlying, or not even underlying, but a major trend, especially in the software realm where they're looking at AI and being like, okay, do we really need 10 new, junior software developers, or can we just use this one AI tool and just replace them completely?
Yeah. Now, in fairness, our company still trends quite young to that, and so it's really just making sure that these are folks that have experience. I wouldn't go against a recent grad either but they need to have like their own hands-on experience.
Experience more than anything. Yeah. Correct. It was so funny. Again, to go back to Western, one of my roommates was a software or a computer science major. And then another one of my buddies also a CS major.
Yeah.
And just how they were prepping and looking for jobs and interviews was like so much different than how I was. Cause they were, doing code practices, like trying to do all this whiteboard sessions, all this training and prep for these interviews, where they were literally going to be like, hey, I literally do not care about where you're going to school or who you know or anything. Like if you can solve this in the next 10 minutes, like you're hired.
Yeah.
Versus me, it was like, I was asking people for like coffee chats and lunches and like networking. It was all about who you know. And it was like, trying to get it in any way I can. And it was just so different to watch them do it. So it's just a different world.
The other thing we look for though is me specifically, I like people that have, and I have to be careful with, because different roles, you don't necessarily want the same thing, but I look for like a high clock speed is how I think about it, like internal clock. They move quick, like their brain moves fast. And that's tough because sometimes I think people equate that like they're fast talkers and like they make quick decisions. And that's, like you don't want that in compliance, for example. I don't want a fast talking, rapid decision making, overly iterative person leading compliance. But I do want them to be able to rapidly process and like have a mental map of where they're going and what they're doing and how to get it done. They can be very quiet. I don't care. They can be very like, I almost don't care how people work. And I tell that often. Like you pick the tools that you want. You pick how you communicate. I'll tell you what outcomes I want, and you go figure out how to do it. And so that's the other thing. People that are comfortable with a high degree of autonomy and like framework direction, like here's the outcomes I want. Here's the situations that I need you to oversee and to be accountable for. But how you run your show, what tools you use, how you operate, totally on you. And so they need to have that level of autonomy. And that's where the clock speed, I think, is important. They can't get bogged down like, I don't know what to do, or I need to spend 3 weeks researching and thinking about it. Right. Like to a degree, it's okay to research and think about stuff for a bit. Yeah. Then you got to move and you got to be willing to iterate as you go. And it's not going to be perfect, especially in an early stage company. You have to be okay with like, here's where I'm going to get. Here's step 1, step 2, step 3. And we're going to operate at these different steps. Yeah. And they're going to be imperfect and manual, and we're going to move through it.
And how do you balance that? I mean, obviously in a startup such as yours, I mean, very high expectations, obviously, with everyone on the company is like, common mission, common goal, this is where we're going. If you're not on it, then hop off the bus kind of thing. How do you manage those expectations with individual autonomy for your employees?
I mean, I think you have to give them this is why we said we write our strategy out, we write our targets out. We use OKRs. I know, that those are pluses and minuses, and people like them and don't like them.
Can you define that, OKRs?
Yeah, objective and key results. Okay. And OKRs, you can get really intense about how you measure them. I think we have a pretty watered down basic version of OKRs. But it's really just, what are you actually trying to accomplish? And do all of these things kind of fit together, right? Yeah. Because I can't have my sales team out trying to accomplish one set of things that is fundamentally opposed with what the engineering team is working to deliver. So you have to kind of keep an eye on those things as one. So that's one thing we do. So we try and have alignment across all of that. So that's an area. We have, and one of our operating principles is, really focused around just, you want to make sure that you can really have clear and concise and difficult conversations if you need to, and make it part of your culture. Like, it's okay to tell you where you're not succeeding, give constructive criticism. Like, this is not working. Yeah. We're off path. How do we get back on path? Yeah. And do it in a way that people don't feel personally attacked. And again, I think if you make that part of your culture, that will help bring those things out to light so that they don't fester and you don't have people going off and down a road that is going to be problematic.
Yeah. And for the right employee, they'll appreciate that, right? Yeah. Like, I would never want to go and be like, I think I'm doing a good job. And then like 6 months later, be like, oh, your half a year result, like, this sucks.
They should never be surprised.
Well, okay. Yeah. Well, like, I thought I was doing okay, Yeah. So no, that definitely makes sense. Obviously, you've seen a lot in the fintech space. What are some new trends or tools or things coming out that you're most excited about in regards to fintech?
We haven't said AI yet in this whole discussion.
That's coming, isn't there?
I don't know. I have my view on AI is just as an example of something I am excited about, and I think it'll be intense. So specifically in fintech around compliance and risk management. I think those are areas where you're going to see a lot of improvement. And we see that in our company and how those tools are helping us scale and operate at a faster velocity with greater success and things like that. So as kind of a boring answer, I think compliance and risk management are changing rapidly. And I think a lot of that is because of, a blanket comment around artificial intelligence, but I just think overall the tooling and the access to the data and the willingness to use new data sets is really totally different than it used to be. And it's just easier to do. I think, the other thing is that there's just way more tools out there is the thing that's interesting to me. Too many. There's almost too many. I made a joke. The last company that I helped run, I always told the finance department, the number of SaaS tools a company has only goes up by definition. Like it never goes down. It only goes, you may get rid of an individual tool, but it's replaced by 1.2 tools within the company or something like that. But so yes, there's almost too many. But I think just the quality of those tools is so much better than it's been.
They're pretty good.
They're much more reliable. They're better supported. The documentation around them is better. So I think just if you're trying to build something, you can go out there and shop for stuff and find a number of solutions, and they're all generally good. They're all scalable. They're nowhere near as littered with the kind of problems as I think 10 years ago or so that you would find. We're like, this is a cool tool, but it's not scalable and it's fundamentally broken at places.
Right. You almost need to get a different one to fix the hole in that one. And then there's just this compounding effect where you ended up with 20 tools to fix just one linear string of what you're trying to do.
I think the other thing that's interesting just in fintech is the willingness of consumers and businesses to try different things, right? I mean, crypto is a good example of like the willingness to like, I'll try crypto. I was out to dinner with some friends the other night, and these guys are teachers and coaches is how I think of them. And all of a sudden it turned into a conversation of like crypto and
you're like, wait a minute,
what tools? Yeah. And I was like, kind of. So I think it was just representative of how many people are willing to, I don't know, take on risk, but they're just open to all sorts of new things that I think typically would, even in an enterprise setting, the number of companies that we talk to that are willing to like try and explore different alternatives and alternative tools and processes and technologies. I think that legacy view that, bankers are stodgy and they're conservative and they don't want to try new things, I just don't think is true anymore. And they're much more open to new ideas and concepts. Yeah.
And I feel like companies are doing a much better job of, offering the free trials, offering hey, let's make it tiered so people, it is accessible. Because you look at it and you're like, hey, it's only, 10, 15, 20, like maximum $20 a month. Like, I'll try it for a month. And if I don't like it, then I can cancel it. It's not a big deal.
Which I think is a lot of what's going on in AI right now.
Oh, for
we
sure.
see it when I talk to other leaders in companies, but bigger companies. Like I'm piloting 6 AI tools right now, and I'll keep one of them.
Right.
And all 6 of those companies are counting those pilots as recurring revenue.
Right.
That's just going to scale to the moon.
Yeah.
And it's clear there's a bunch of companies that are just not going to be retained, and it's going to be brutal.
No, double-edged sword for sure. So speaking of AI, we can get a little deeper on that. So you guys started in 2019, you said.
Yep.
So that was kind of like ChatGPT was just about to come out. AI was kind of getting a little bit more popularized. How since then have you guys adopted it into your company? How is it changing the way you guys are working, workflow, or maybe even the product that you're offering?
It hasn't really impacted the product. I mean, our product in the end is a basic savings account. It's meant to be super simple and boring. And, there are things that we kind of see on our roadmap that will be interesting over time. I don't view them as AI based. I view them as and it's the more data that you get, the more personalized you can drive the product and the more you can customize it, and you just have a data advantage. I think AI can play into that, but for our product, I think we have, it's a very kind of it's a simple product. And so I think we have a very kind of finite view of how these technologies are going to play in the product and how much should they play. And anything beyond that, I feel like you're trying to, classic entrepreneur fault, you're trying to make a product that you find interesting and that you want to exist for your benefit or investors' benefit, but your customers don't care about. I can tell you our customers never ask us when we're going to have an AI feature in it. It just doesn't happen at all. But from a compliance standpoint, from a risk management standpoint, like those tools, we seek out vendors that have those advantages and capabilities. From a marketing standpoint, we definitely are playing with a lot of different tools that I think are interesting that will help us scale. From an engineering standpoint, our team uses a lot of the standard stuff, and I think it's helped us maintain a pretty base headcount that we continue to scale the business with, and we see a lot of improvement that can continue to come with that. We have to be careful, though, with the sensitive data that we have and the sensitive nature of some of our customers. Like, it's not a free-for-all. So we have customers of ours that tell us in the master services agreement, you cannot use AI in your product. And we have bank partners that are very intense on third-party risk management. Like, who are these third parties? How do they use it? So I think in fintech, there's definitely much more of a there's a brake on, so to speak, that's slowing as it probably should.
Yeah. Well, nobody wants to be the first.
Nobody wants to be the first.
You will have that first data leak of like, okay, we're going to try it. And
that's, I remember, I think it was like the CTO of JP Morgan Chase was at a conference a few months back. And I shared this with my team. He's like, a lot of y'all banks and credit unions need to be real careful with what you're putting into your product and your environments from an AI basis. Where is this data coming from? Where is it going? Like, who are those third parties? Like there's a lot of black boxes behind that should be scary to them.
100%. And I feel like that's the reason, without a doubt, is nobody wants to be the first person. Because as soon as maybe it's not the first or the second, but it's somebody. As soon as people start adopting it into the banks and financial stuff, I mean, somebody's going to have something that just goes wrong, terribly wrong.
Yeah. And the reality is, especially in fintech, you're going to have to go through, whether you know it or not, you're going to have to go through a lot of compliance, lawyers, and all sorts of people whose job is to prevent bad things from happening for these institutions. And when they hear AI, like we're going to launch this AI powered, they immediately get super skeptical and start looking even deeper to like what is actually going on here. And I think so. There's a double-edged sword of like marketing your fintech as an AI, driven thing. Yeah. I think there are some people that are going to be super excited and will pilot it and test it.
Sure.
And then there's a lot of people that are going to be behind the scenes saying, I don't know about that. So.
Yeah, no, it's interesting. And it's crazy what you can use it for, what you can't use it for, and just everything in between. It's getting absolutely crazy. But anywho, so you've been covered by the media a bit. Have a couple of media coverage. We are trying to kind of go through some of the companies either we're invested in or we look at or whatever, like media training. What are some biggest piece of advices you would have for media training of what to say, how to say, how to present yourself in the public is kind of something people want to use?
I've been doing speeches and public speaking for I was a student speaker at my high school graduation at Western. They had like the Western big fundraising day. I remember it was in an event where the governor was there. Wow. Both our senators were there and I had to give the speech. So I've been doing this a long time. And I think a lot of entrepreneurs have not.
Definitely.
And like most people, they're petrified of this.
Yeah.
So I think the first thing is you just have to find something that works for you. You don't have to be awesome at, as I said earlier, extemporaneous speaking or love getting up in front of a group, but you do need to figure out how you can communicate. And maybe you don't want to do podcasts. Maybe you don't want to do, panels or whatever. Like there are certain things that you don't have to do.
Sure.
You better be really good at writing then, or you need to be able to be excellent at very short, concise clarity of communication to your team. So find your method and mode. The other thing, that I have learned, which is kind of counterintuitive, is I do not prepare. So
really,
I looked at your questions just to see what I was walking into, but I spent 30 seconds.
That's exactly what I want, honestly. When I send these, I make it very clear for people because I'm just sending this so that people know the rough flow that we're going to do. Cause it would be so boring if I was just question 1, question 2, that. No one wants to listen to that.
So I'll look what is this? What are we trying to talk about?
And for anyone listening to this, that it might be a guest on the show, that's exactly how you should do it.
But part of it is I just want to make sure that should I be doing this? Right. And I don't want to walk into a situation where I shouldn't have done this discussion.
Yeah.
But I don't prepare. And part of it is that if I can't talk about my company and how I think about building companies or how I think about our culture or I shouldn't be running this company.
Yeah.
and that I think that's scary for a lot of, especially first time entrepreneurs, but that's the job, right?
Yeah.
This is your job.
It's on your chest, it's on your sleeve. You gotta be, yourself, but then you're the face of the company.
Yeah, correct. So that's one thing I don't prepare. And there's a little bit of a nuance. If I'm going to give it an investor presentation and they want it, I'm going to create the deck, and I'm going to go through it with my co-founder and does this work good? So I don't prepare as massive air quotes around that. But from a general interacting with press or other things, you just kind of have to get comfortable with winging it.
Yeah.
And it comes across so much better. And it takes less time. That's kind of the second benefit.
Seriously.
Of it.
Yeah. The people that prep so much and have their answers rehearsed, you can tell.
Yeah.
It's if you know the questions that are going to be coming, it's I'll answer this. And then it's harder for you too, because you're trying to remember rather than just, this is what it is.
Yeah. Well, and so part of that, I did an interview with a group the other day and, was a benefit magazine, so very wonky into our space. I didn't love the interview, but I read it and I'm like, okay, well, I could have done that better. So what should I say different? So I will kind of reflect and review. Am I doing good at this? Where am I strong? Where am I not? Am I over talking? Did I have good, clear answers? So I think just it's like anything else, a skill that you have to practice and then reflect on. How did I do? Could I improve? My other co-founder, I'll ask, or both of them, like, how can I do this better? Yeah. What did you think? And they give good feedback. So it's just like anything else, like managing people or product management or engineering, like just practice. View it that way.
Definitely. As somebody that's kind of had practice with this in terms of companies and running a business and all that, what has been kind of your biggest learning or biggest thing that you've gained from all of that?
It takes a very long time.
Yeah.
This is not a short journey. Yeah. And I think a lot of people have a misguided view of the amount of time and sacrifice that goes into building a company.
Yeah. Even if you know that's going to be a lot.
Even if you know it's going to be a lot. Yeah. And so I think just, it's hard. It's like having a kid, right? Like if you've never had kids before, and you find out like my spouse and I, or my partner and I, we're going to have a baby, or we're going to adopt a baby, whatever it is. Like if you're going to go from no children to children, you could talk to as many people as you want about what it's like, but until you do it, you have no idea what it's like. Yeah. And I think similar, like it takes a very long time for children to raise a child. It takes a lot, and it takes a lot of sacrifices. And being an entrepreneur is very different, but I think there's some similarities in the sense that I don't think you have any idea what you're in for until you've done it. And it's going to take a lot longer and a lot more of sacrificing to be successful than you realize. And, I don't know. I try and talk a lot of people out of being an entrepreneur.
Like don't do it. Yeah. Just don't.
Like, what are you trying to get? Why do you want to do this? What are you trying to get out of it? And, if it's for money, like stop. Yeah. Especially like high scale technology based. Like if you're trying to start a lifestyle business, or consulting, I guess, like I need to make money and this is how I'm going to make money. A little bit different. Yeah. But if you're actually trying to build a company and you're going to bring in investors and things like that, and you're going to recruit people to it, it cannot be for money.
On the same vein, whenever people come to me and they're like trying to raise VC money, I'm like, just don't. Like, why would you do that? Like, they're like,
the default should be not to.
Like, if you can not do it, then don't. Because it's like, as soon as you do, it's like golden handcuffs. It's like, all right, now we're in this together, so you better watch out.
Yeah, for sure.
Whole thing. But we talked about this a little bit before we started all this, but how do you balance, and you have a big family life. Yeah. How do you balance that with all of the other stresses of running a business?
Yeah. I told you as we were walking out, I have 7 kids.
Which is amazing, by the way.
Yeah, thank you.
It's awesome to hear that, because not a lot of people have that many kids nowadays.
Yeah. Especially in my line of work, I find it's not typical. I feel like I know more entrepreneurs that have no kids than those that have like anywhere over 4. Yeah. Even. So their ages 2 to 17. I've had 2 kids since starting this company.
Oh my gosh.
I had 2 kids when we started my first company. It's been a journey that way. So my spouse, Rebecca, is just phenomenal, right? And phenomenal starting with, she's along for the ride. Like she knows how I think and operate, what makes me happy and successful, and how I thrive. And part of it is doing this. And so that's kind of what she signed up for. Yeah. And how do we construct our life to make it work? And it has not come without sacrifices or, moments of like, man, was this really the right decision? Is this really going to work? How are we going to make this connect? And you just work through it. And so for me, having that kind of broader family situation has been super, super important. Yeah. But outside of that, I think we just try and keep life as simple as we can, which, with 7 kids and she also has a small business. It's never simple. But we really just try and construct our life like this is our life. And so how do we make it work? And we just continue to commit to that, I think. Yeah. And I meet a lot of entrepreneurs who I think kind of find themselves in this situation. Like they were at a big corporate job and they just had this idea they couldn't not pursue, which is great, but they didn't build their life to make it successful. Yeah. And then you can just see on their face, it's just, they're dragging 100-pound weight behind them every day. And it's hard. harder than it needs to be. Or you see people that kind of fumbled their way into it, and again, their life is just in conflict with it, and I think that's tough too. Yeah. I will say, like, the remote piece makes it so much more possible. We could have an office here in Spokane, and I could have built a company, and maybe one day we'll do that and go back full office and do it that way. And I think that could work, but I think you need to keep your kind of world small. Yeah. Right. And remote makes that easy, but we wouldn't own a farm an hour outside Spokane either. That wouldn't work. Yeah. The kids wouldn't work that way. And so I think you just have to construct your life around the life that you live, which makes it easy to say, but it's a lot harder to actually do.
Yeah. Definitely.
And I think people fight it. They just, for whatever, even people that don't work in startups or don't build companies, you could be working at a big company, traveling all the time, and your life just doesn't fit that travel schedule. And I think I just see them fight it and fight it and fight it. And I don't know, that's hard.
Yeah, that's tough. If you could go back, and I'm going to go back a little bit earlier than the original question, but if you could go back to how old were you when you had your first business, car detailing? 14?
I was 13 or 14.
If you could go back to your 13 or 14-year-old self and give yourself one piece of advice, what would it be?
I don't know. It's what would I have needed back then versus what the perfect advice soundbite. I think what I could have heard then, and maybe as universal advice, is don't be afraid to take those risks and to try things and put yourself in an uncomfortable spot and have faith that things will just work. Right? They don't always work, but you have to have faith that they could, and that they probably will in some form or fashion. Now, what work out and what that actually might mean, you don't really know, I guess. I don't know. I think there's an element of just having faith and comfort with the unknown that I think is really hard, especially for kids and young adults. I didn't as I think back to who I was back then, it's just hard to have a mental picture of the world and how things could happen. Somebody said something to me the other day, that once you hit, around 40, or even earlier than that, what 20 years is. You can picture 20 years of life spent.
That's crazy.
And I think it's probably in your 30s when you're kind of from 10 to 30, let's say, you really have a clear picture of who you were and what was going on when you're 10 and all the way till 30. And I think even more from a professional standpoint, when you're in your early 20s to early 40s, that professional, wow, I really know what that looks like. When you're 13, you have no concept of time that way.
No. And everything's been so structured for you, right? Your whole life has been you do this and then this and then this.
Yeah.
Okay.
And I think that giving that sense of faith and trust and risk taking to a young person when they're a teenager or even late teenager, thinking about business or what they want to do in life, I think it's hard for them because they just cannot picture that. And if I could go back and somewhat implant that wisdom and knowledge that I have now of what 20 years is like and how things can play out and how they can just work out, I think that would be helpful would have been helpful for me. I think just to be a little bit more, to stick with stuff longer and to take more risks.
Just got to believe.
You got to believe. Yeah.
I love it. Okay, cool. Anything else you want to add? Where can people find you? Where can they look up SecureSave?
Yeah, SecureSave.com. If you're an employer, check it out, big or small. We have companies here in the Spokane area, like Lee and Hayes, Move Her, which is a local company in the movie. Yeah, so a couple customers of ours just locally. So shout outs to them for being great clients. And then I'm on LinkedIn. That's kind of my main place. Cool. I post, if you're interested in fintech and stuff like that, then I'm pretty active.
Love it. Awesome. Well, hey, thank you for your time.
Yeah, this was fun.
Perfect. Thanks.
Cool.